Earnings obviously underway for the tech companies in particular, and that's where the street's focused right now. Check out shares of Alphabet this morning. That stock's up by 4.5% after the company beat expectations on both the top and the bottom lines. And joining us for right now for more on the sector is John Belton. He's growth equities portfolio manager at Gabelli Funds. John, I think not just Google or not just Alphabet investors, but some of these tech investors writ large are probably breathing a sigh of relief with what they saw from Alphabet last night. There were all these concerns about what it could say about the advertising market if things were slowing down there. None of that came true. And in fact, the company actually raised its margins on advertising, which is pretty impressive.
Yeah, and I think, thanks, Becky, I think that's been a theme of earnings season so far, investors sort of breathing a sigh of relief that despite all of the noise that's been out there, company fundamentals, at least through the first quarter, so on a backward-looking basis, remain pretty strong. Economy is on pretty strong footing. So that's good to see despite all this noise.
What do you think of the move this morning? Up 4.5%. For the 1 year, it's up by about 7%. It's doubling down and saying, yeah, we're going to keep spending. CapEx is strong, $75 billion this year.
Yeah. So the Google numbers or the Alphabet numbers.
We were just saying, I don't know how many years ago they changed their name to Alphabet. I still call it Google.
Yes, I think we can call it Google. But the numbers were really strong. To your point, top and bottom line, I think each key top line metric was better than expected: search, YouTube, and cloud. Most importantly for Google, and what's always the wild card on earnings, is margins. And margins were much better than expected. They sounded pretty benign on the macro backdrop on the ad market, saying broad-based strength in the first quarter, cited a bunch of different verticals, advertiser types that are still strong. And then on the AI side, they're doing a lot of really interesting stuff with AI. They're integrating this AI search overviews into search. They're previewing this AI mode, they're calling it. I'm not exactly sure what that's going to be. It sounds interesting.
Are you surprised that the AI piece of this hasn't reduced the revenue piece of it?
You know, there's a big fear out there.
Because that was the fear.
Yeah. So, you know, it's complicated because I think it's going to take time. If this disruption is real, it's going to take time to really seep into Google's numbers, which is why it's been sort of a tough stock. The multiple is derated a lot, but the earnings really haven't changed that much. So I think right now Google needs to kind of prove to investors that they're using AI to strengthen their business and that they're not letting it erode their core business.
What does this tell you about the earnings we're going to be hearing next week? I guess we get Microsoft, we get Amazon, we get Apple. Who am I forgetting?
Meta or Facebook.
Right. Well, another one that changed
another
their name.
one,
Thank
right.
you.
So, you know, I think Google, but also a lot of the bellwether tech earnings so far, whether it's Taiwan Semiconductor, Netflix, ServiceNow, especially
because you're talking
this
about
week.
The CapEx and the things that they're going to be spending.
Yeah, like a lot of these tech earnings have been really strong. And the messages so far are fundamentals are good. Commitment to invest in AI is very much there, despite a lot of fears that had been percolating. And so I do think, you know, expectations, as often happens in the market, investor sentiment moved to the downside way more quickly than company fundamentals and company decision making. So, you know, I think there's been a bit of a reset in expectations now after this first wave of earnings. So it's maybe a little bit of a different setup next week. But yeah, I think that's sort of the broad market feeling right now on tech.
Well, we were talking with Carrie Firestone earlier, and look, the sell-off was pretty brutal, down 20% just for the S&P, even more for the NASDAQ. But now you're down to the S&P down by just about 10.5%. So we've seen these fears. We've ratcheted it back. The market's always forward-looking. What do we think is going to happen over the next 3 to 6 months?
Well, there's 3 to 6 months, there's 3 to 6 days, and there's 3 to 6 hours in this market.
Right.
And there's so much volatility. It does feel like a pretty unhealthy market backdrop right now. The market's just hanging on every word coming from the administration about tariffs. You know, if you look through that, I think we need to focus on the macro and on the economy. And is this tariff uncertainty going to cause a downturn? Are higher tariffs going to cause, you know, the inflation fire to reignite? So I think those are the types of things we're focused on.
But ultimately, you do what? You tell people to buy right now or wait and see?
I'd take it slow. I try not to overreact to the barrage of headlines that seems pretty constant.
Right.
Take it slow and focus on fundamentals as always.